Which markets are you optimistic about? Because we have seen a lot of concerns about, for example, the Taiwanese market or the South Korean market, which are heavily exposed to trade.
Yes. Well, I feel that number one is China, but
we're close but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now.
Well, joining us now is Alison Shimada, who's a senior portfolio manager and head of the emerging markets equity team at Allspring Global Investments. You're usually in San Francisco, but we are very fortunate to have you here in Sydney. So great to have you with us, particularly on post-CPI day and post-Powell commentary day as well. I wanted to start off with our MLive question of the day, which is asking, are traders right to be pricing in one Fed cut? Do you think they should be pricing in any Fed cuts at all, given how tenuous the inflation outlook seems to be right now?
I do think one rate cut is actually reasonable because the course of what could happen in the following year is very uncertain. So, but I do think it's also smart to have come down in terms of the consensus view on an even larger number of rate cuts. I think it's a pause here, and we'll have to see what Trump decides to do in terms of enactment of new policies, and that will have an impact on inflation in general. So I think it's 0 to 1 really this year.
It's interesting if you kind of want to try and get away from either direct US policy impact or indirect impact. China would not be one that seems sort of intuitive, but you guys are actually fairly positive and constructive about the course of the recovery from here on.
Yes, I think the risk is actually to the upside for China because some of this tariff risk is priced in. So, and we've been talking about tariffs in China since 2017. It's not yesterday. So I think that investors and traders in China, in Asia, already kind of assume 60% tariff hike on day one, which did not happen, obviously. But it could gradually increase. I think that the other point to make about China is really that they want to have a little bit leverage to do some negotiations with the U.S., and likewise, the U.S. wants to be able to negotiate. And I think from his tone so far, President Trump, it has been obvious that he is treading a bit lightly on China right now. So I think there's room for them to come to the table, and that's what they both like, a proportional response.
Does that make broader EM more attractive? Is China still that strong anchor correlation?
I think it's very, very attractive now. I think last year and the year before we were cautiously optimistic, but I feel very constructive on EM because of this pricing down of all of the securities, whereas I do think in the U.S. it has not been fully discounted. So I think that the pivot should be to looking at the U.S. and what the impact is now.
Which markets are you optimistic about? Because we have seen a lot of concerns about, for example, the Taiwanese market or the South Korean market, which are heavily exposed to trade.
Yes. Well, I feel that number one is China, but besides that, I feel that for other reasons, some of the smaller markets like Poland is very interesting due to the fact that we have additional news on the possibility of the end of the war, and reconstruction opportunities through Poland would be very interesting, I think. So I think that not only that, Mexico, because I think that Claudia Sheinbaum has been very proactive in negotiating with President Trump and has been relatively successful at that, emphasizing cooperation, and they will make concessions because they have a lot at risk as well. So I think, interestingly, things will develop over time. I still think with Taiwan, even though we have a slight underweight to that due to valuation, that so critical and so many advanced technology companies in Taiwan that you really do want to have a position there as well, a very healthy position.
Have emerging markets priced in the fullness of the Fed risk? I mean, you talked about how we were expecting perhaps 60% tariffs on day one, and emerging markets have priced that in. But what about the fact that the Fed might not be able to cut as fast as they want? And we saw this huge market reaction after the US CPI numbers.
Well, I do think that, yes, they haven't nothing is ever fully priced in. There will always be some surprise around various issues. But I do think that the valuation support that we see in emerging markets is much stronger than it is in the developed markets. And I think there's still catalysts for growth, whether it be domestic cyclical recovery, as in China, or also structural growth story in India. There are other catalysts. And I think that they're not as heavily priced they're not as expensive as the U.S. and the rest of some of the developed markets. So I think, we built in a lot of, interest in AI and AI-related companies, and that pushed up a lot of the valuations, and it's normalizing or, coming down a bit, and that is healthy for the markets.